Good morning, everybody. It's the 7th of November. Welcome to the start of a new trading week. I'm Joe Neighbour, joined by Steve O'Hare. How you doing this morning, Steve?
Yeah, pretty good, mate. Thanks. All good.
Good. Okay, so a bit of a mixed start to the week by the looks of things so far. Let's have a quick roundup of the latest news impacting markets over the weekend and from Friday. So front and centre, we had the non-farm payrolls on Friday and they beat expectations. We saw an increase of 261,000 for October, which was above the consensus forecast of 200,000. And the September increase was revised higher to 315,000 from the original estimate of 263,000. Overall, the employment report was a bit mixed. However, the household survey recorded an increase in unemployment rate to 3.7% from 3.5%, and that's above the consensus forecast of 3.6%, with the number of people in employment recorded as declining to 328,000 from a previous month. In terms of the Fed's latest commentary, one of the governors there, Collins, stated that it makes sense for the central bank to switch to smaller rate increases, but she added that rate increases may need to be more than she anticipated in September. She added that the data on earnings are inconsistent with the 2% inflation target, while it is premature to speculate where the rate cycle will end. On Friday, we did see a little bit of a surge in equities. There was further optimism that China would relax its coronavirus policies and effectively abandon zero cases target. In response, there was optimism that the global economy would post a strong rebound, and therefore there was strong demand for equities despite there being higher bond yields. We also saw the dollar reverse quite sharply. The dollar advanced in the immediate response to the US employment report, but was then subjected to sharp selling with losses across the board. Commodity currencies posted strong gains amid hopes that China would relax the coronavirus restrictions, while defensive dollar demand declined. We also saw some strong numbers from Canada. The latest labour market data recorded a strong employment increase of over 108,000 for October from 21,000 previously, which was substantially above the consensus forecast of 10,000. So well out on their data there. That's pretty much that for the headlines. So now we can get stuck into some charts and have a look at how things are setting up for the week ahead. Steve, do you want to kick us off this morning?
Yeah, sure. I'll share my screen. Start off as normal with cryptocurrency and looking at Bitcoin in particular. Taking a look first of all at the weekly chart, which isn't that one. This is the one here. Obviously, downtrend. We're still in it. We're continuing. Let me just get rid of a few lines on here because it looks a little bit confusing. And we can see that I'm actually going to get rid of that as well. The main sort of formation that we're considering is this double top formation. And I know the levels aren't exactly the same, the highs, but they don't need to be. Double top formations can be very can have different highs and things like that. So the neckline for this is at 28,732 on this chart. This was acted as a support a number of times, and obviously mainly between the two highs, the two peaks that we saw. Price action more recently has been down to 17,600. And we have been trading above this. Let's dive down into the daily chart to really get a closer look at where the current price action is really sort of like struggling to rebound from these levels. So we've got a number of resistances to really look out for, to find where we will find major sellers. That comes in at 22,800 and 25,200. Currently, we're in a corrective phase. This move higher stalled on Saturday, actually, at a high of 21,478, and we've seen this formation here on a candlestick formation is an evening star formation, so that's a negative formation, and when it's formed like this, you expect further downside, and that's today. So we're seeing it. So this is playing out really nicely. Remember, resistance now will be also here at 21,478. That was the high of this rally, and we expect this correction to continue into the next few days, really. Only a break of that high would negate that. Support below comes in the form of the swing lows, the dips that we saw, which played out really nicely on a support basis. Let's make it blue so we do sort of like make sure we know it's a support level. That comes in at 20,000. So for me, this is the range it's got to break out of to get the next trend. So look out for that. Moving over to gold, we saw a really strong rally on Friday in gold. We took out the initial resistance at $1,677 and closed above there, so that's quite significant. However, price action today has been more negative. We've opened up where we closed on Friday, and which is around about the 1682 level, and moved lower, trading currently at 1668. So really sort of like the Friday's candle was more of a Marabuzo candle, which is a really strong candle. We should get support around about 50% of that candle. That'll be around about the 1655 area. So initial support there. On WTI crude oil, again, another real strong rally on Friday. Everything seemed to sort of take a little bit of heart from the real sort of like decent non-farm payroll figure that we got. Trendline support in crude oil coming in today at around about $86. Resistance, obviously we can look for the horizontal resistance here, and we can show that that is at the 92.60 area. So that's the level of resistance we've got to really sort of overcome before we really sort of like say, yeah, there is a good potential that this is a bottom that's in place. We can see that this is like a little bit like a head and shoulders formation. It's an upward sloping neckline though. So there we go. So that's what we're looking at, and the neckline really needs to break above $96 today to actually confirm this formation or this bottom. Yeah, that's about it on the crude oil side of things. Joe can take us through the dollar and sort of like see what a whack that's taken, and then we can sort of move on to the indices.
Yeah, all right, lovely. Thanks, Steve. So let's start off with the dollar index and just bring up the chart. So all in all, still pretty positive on the longer term setups. This is the daily charts. Just take a quick look at the weekly as well, just to see how we finished up last week. So it's been a pretty parabolic move to the upside, but we did break that. And then last week we saw a big move to the upside and then closed back below that support, resistance at 111.31. So doesn't look particularly healthy, that candle, if we're honest, from last week. But we are on the front foot again this week, and let's just take a quick look back at the daily. So potentially forming some sort of consolidation at the moment within this yellow band, or this yellow channel that we've got on the chart. Obviously, we engulfed all of the gains that we posted on Thursday's session with that sell-off on Friday. But for me, I think we've got to concentrate on this kind of level round here, which is the uptrend. We've also got a few other support levels here, and most notably the low that we posted on the 27th of October. So if that starts to break down, then for me, we are confirming some sort of top. We talked about it being a potential double top, this one from the 28th of September, then this one from the 21st. Maybe it could even be a triple top. It wouldn't be the prettiest of triple tops, but maybe we are in the process of forming a top, but we need to see a little bit more confirmation. So I think if we can take out that low at 109.53, then we can start thinking about lower prices on the dollar index. But for now, the overall trend does still remain in place, but looking a little bit fragile. If we take a look at euro US dollar on the effectively flip side of what we've just looked at, we know it's trading in a bearish, or was trading in a bearish channel. We saw a breakout on the 26th of October, but then prices retreated back within that range. We saw a big move to the upside on Friday. Maybe some sort of consolidation pattern has taken place, and now we're going to continue moving to the upside. But for me, it still needs to do quite a bit more before we can get too excited. Ideally, take out this high here at 100.97. And if that is the case, then maybe we have formed some sort of bottom on euro US dollar, and we can start looking for higher prices. But it still needs to do a little bit more before I think we can get too excited. But maybe some positioning here, maybe some lightening of any short positions that have been maintained for a period of time. and start looking to maybe shape up for a risk rally in euro US dollar. If we take a look at cable, bit of a mess this one still trading in a downtrend on the daily formation. We saw a break below the short-term uptrend that was posted on the 3rd of November. We tried to rally on Friday to engulf all of those losses, but couldn't quite do it. We come up just shy, and we've seen a gap lower today, down by 0.44% as things stand. Really, sterling looking pretty weak across the board, to be honest. This was sterling Oz. We saw a breakdown here below 176.72 to complete a double top pattern, so that looks pretty bearish. We're just seeing a rally to retest that newly formed resistance, so not looking too good there. If we look at sterling CAD, again, we can see what looks to be some sort of top pattern formed, a big move to the downside on the Thursday, bit of indecision posted on Friday. Still looks like it could head lower from here. Sterling Swiss, quite interesting as well. Looks as though it's broken down below support at 112.86. Let's have a look at sterling yen. That was trading in a range. It saw a break to the upside of that range, but now back within it. And looks as though that may continue to play out. So still resistance of between 167.94 to 168.43. Sterling New Zealand, as we saw with sterling Oz, bit of a push to these commodity FX currencies just because there was a bit of a move into riskier assets. We can see quite a neat head and shoulders there actually on this. Left shoulder here, head here, right shoulder here, break down to the downside, and really showing no signs of turning around anytime soon. Up by 0.35% as things stand, but it did gap higher this morning, so maybe look for that to be filled at some stage later in the day. Just take a quick look at some of the other dollar pairs. So this was quite an interesting one. This is dollar CAD. And I highlighted this last week. It's rallied into a pretty significant level here. We've got this blue line of resistance. If we go back to the weekly chart, we can see it was a level from back in April 2020. Done a pretty good job at capping the upside, but for now, looks like it's forming a decent looking head and shoulders top. So if we go here with the left shoulder, down to the neckline, here's the head, here's the right shoulder, formed there. And we closed below the neckline of that pattern on Friday. We've gapped higher today, but still posting a bit of indecision so far. But that looks like it could play out to the downside for me, and that would indicate that we are going to see maybe continued dollar weakness. In terms of a measured move target, if this selling does take hold in dollar CAD, then we could be looking for a move down to 130.14 on that in the short to medium term. So that looks like quite a nice pattern to keep an eye on today. Dollar Swiss, this is quite interesting as well, rallied into a major level up here at 100.50-ish. We saw a push above that on Thursday. Looks as though it was going to break on and continue moving higher. But then we saw this bearish outside candle form on the next session to engulf all of the previous day's gains, trade back within this range, and therefore you wouldn't bet against maybe lower prices maybe playing out, or at least some consolidation in the short to medium term. There have been a couple of requests from one of our viewers on YouTube. Good morning to you, sir. And yes, let's take a look at these pairs today and see if anything is standing out. Let's have a look at Euro New Zealand dollar first of all. So we're going to start off with the daily chart here. So immediately focusing on this major resistance level that we've got here at 137.47, and that's done a pretty good job of rejecting upside advances. Obviously, we saw this big move to the upside, but then a fair amount of consolidation before then a break to the downside. I think one of my other charts for this, I was suggesting this was a bit of a top, and still believe that may be the case, and therefore I would have a bias for looking for lower levels on this today. In terms of where we can look for downside targets, just going to look at the fib levels from this short-term move here from the from mid-August to the highs that we posted on the 17th of October. We've got a couple of fib levels to take a look at. So we've got 50% first of all at 167.17. That seems to have done a bit of a job as providing some support. Below that, we've got 61.8 at 165.20. So I would be looking for these levels to provide some sort of support, but overall I do think we are in the process of forming a bit of a top here. So I do believe the bias is to the downside on this at the moment. I would suggest maybe some sort of top in place here using these two previous swing lows. So really looking to sell into any rallies towards 170.60. Just take a look at the intraday chart to see if there's any standout levels on this. So as mentioned, we gapped to the upside on this today. So that would be maybe a short-term play here to try and fill the gap on a very short-term basis. So if you were to sell at current levels with quite a tight stop, targeting a move down towards that gap fill at 167.81, then some reasonable risk reward on that actually, about 2.83R as things stand. So from a very short-term perspective, maybe you could look at a gap fill there. If we then start to take out these lows that we posted on Friday at 167.34, then there's a fair amount of fresh air to move into on the downside here. So yeah, I agree that that looks quite bearish, and I would agree with the selling stance on that this morning. Looking at Euro Oz, this is a little bit different. Euro had a nice move to the upside on Friday, prompted by the weaker non-farm payroll numbers. So this for me looks like it's been trading in a bit of a range, potentially forming a double bottom pattern on the break above resistance at 153.54. So we've seen a pullback to confirm that level, which seems to have held quite nicely. So that seems to be doing a pretty good job as support. So if we are to believe that on the longer term charts, this has formed a double bottom pattern, then ultimately we could be looking for higher prices on this. And let's just take a measurement roughly of this pattern to indicate where prices could potentially go to. We're looking at a move up to sort of 163.80. Obviously a fair amount of resistance to overcome if it is to go to that level. But all in all, I would say this looks quite bullish. And therefore I'd be a little bit tentative about selling this at the moment. Let's take a look at the intraday levels. So that consolidation that we've had since breaking out above resistance is forming a nice channel here on the 1 hour chart. If you are looking to sell it, then arguably you could sell into this downtrend over the top of this channel and maybe target a move again to fill the gap that we've created on the intraday charts down at kind of 153.79. So depending on how aggressive you want to be and where you want to place your stop, maybe there is an opportunity for a very short-term sell on this, but ultimately I think it is going to break from this channel and continue moving upwards in line with that double bottom pattern that we've completed on the daily chart. Hopefully that was useful. If anybody else is looking at anything else, then feel free to send the charts over and we'll take a look and do our best to give you an opinion on them.
Cheers, Joe. I'll take a look at the indices now. Looking at the DAX to start with, we've got this downward trending resistance line, which last week's price action has basically broke above. However, it has formed a hanging man candle. And although it looks positive, it's closed higher on the week, and it's the 5th week of gains. The fact that we had a big sell-off and rallied back and closed higher, you'd think that would indicate a positive candle. However, this sort of formation of this candle, the hanging man, is negative. So really sort of like focusing now on the potential for a reversal from here. You know what I'm like. I like to look for these selling opportunities, even though indices have continued to rally over the last 15 years. But I won't give up. So yeah, for me, price action really needs to get above that 13,570. If it does, then that is positive, and it feels like we have this is going to be a continuation higher this week as well. So quite pivotal, I think, from a trend perspective to see how this plays out. On the daily chart, I've just highlighted this, the sort of like how this rally and how steep it's been. This is forming an ending wedge formation as well. So really looking again for a break down below 13,000 would be negative. So really has to sort of maintain these gains quite aggressively. Looking at the Dow, the same sort of formation on the weekly chart, a bit of a hanging man candle, and we've reversed from the highs that we saw. We got up to around about 33,000, and although we've got off to a good start this morning, this could potentially be a bit of a red herring, bit of a sort of opportunity to sort of sell into these gains. Nice sort of like trend line resistance coming in around about well, we'll give it an area. This week we'll find the 33,000 again should cap this rally, and you know, from a negative perspective, I'd be looking to sell into any gains that we see this week until we really get a clear break. For me, Nasdaq has been the one that's really sort of like seems to be leading the way in terms of I think we're coming to the end of the earnings season anyway, so it feels like the bad news is out of the way. But last week's candle was we basically formed a evening hanging man formation, which is not an unusual one that you'd see. But normally when we get a rally, get a bearish candle with it's a hanging man. Normally it's a shooting star for an evening shooting star formation. Although this is only short term, so there's plenty of opportunity for the week to sort of like you know, change my mind on this. But last week's candle looks really sort of like frightening, and we've seen a number of these over the last 2 or 3 months, and they've been pretty negative. So really looking to get let me just get on the daily chart, is to show that I'm not always bearish. I did have an inverse head and shoulders. Neckline was at 11,685. That failed to break there. So there was a potential inverse head and shoulders, and it didn't play out. So that's what's led to my bearishness overall on the Nasdaq. It's definitely the one that I'd be very cautious of from an indice perspective. That's about it, Joe. We can go for the gun to head. I don't know how we got on Friday.
I'll go for it in a second. We've just got someone on TradingView asking for a look at silver. So did you go through silver?
No, I didn't. So
right.
Let me jump onto silver. Yeah, I haven't looked at silver for a little while now.
Looks like it's bottoming quite nicely to me.
It does look like it, and also, I don't know if I went. Did I go through gold? Maybe I didn't. So let me go through silver first. And yeah, let's look at the weekly chart first of all. This was the range we were in. That's the only reason that that's highlighted. But if we take a look back, we can see that a previous swing high that we had all the way back in July 2016, coming in around this area, we've sort of failed to sort of like get meaningfully below it. We got down to a few months ago, when was that, or August, $17.50, and we've rallied really nicely off it. And as Joe said, this is forming a really nice inverse head and shoulders formation. Let's take a little bit of a closer look on a daily chart, and we can see that we highlighted this area of support back around about June, July time, 2020. So that was acted as a great resistance until it actually finally broke, and then we got the catapult higher, and this seems to have done a decent job of supporting. So an inverse head and shoulders formation. Let's draw it on the chart. This will be the left shoulder, the neckline, the head, and it's an upward sloping inverse head and shoulders formation. So we really need to break above. Let's get rid of that Fibonacci because that's confusing things. We really need to get above, I would say, $21.50 this week, or yeah, this week would be great. I think we'll find some decent resistance around about the 21.40 level. That was a swing low all the way back in September 21, and we obviously found that as decent support as well in May this year, or May all the way to June. So for me, a break above that 21.50 level would confirm this inverse head and shoulders formation, and for me that would leave you with the potential for a decent upside, and the measured move of that would be around about $25. So that would give us a good opportunity, but we need to see that formation break. Until then, we're still in a bearish mode. Let's see how that impacts on gold, which we've talked about, this overriding double top formation, which has been confirmed in gold, but we haven't really seen this break of 16.15, and we really need to see this break of 16.15 if the bears are to win this one over. Until then, we're seeing a little bit of a potential, there's two potential double bottoms here. Well, one is confirmed this near-term one. We saw the neckline resistance came in at 1675. We closed above that on Friday, 1682, but we have had a reversal. Now, dollar is under a bit of pressure. That's led to gold rallying, but it's got a lot more work to do to really sort of break out of this bearish mode that we're in. So from a similar perspective, we've got this bearish channel. We've closed above the bearish channel, so it's the first sign really that gold has potential to bottom out here. For me, the double top formation still is holding at the moment. That has a potential for a move down to 1365. That would mean that the dollar has rallied through the roof. But yeah, maybe the dollar's slowing. Maybe we're going to sort of we're seeing a little bit of an improvement in the outlook for the US economy, and maybe that rate cycle is going to slow down a little bit. But still, I think got a lot to do before we get confirmation of that. So yeah, I hope that's helped.
Thank you, Steve. Really good. Okay, so yeah, gun to the head challenge. So this is where the two of us pick trade ideas live on the video in the hope that we can make a bit of a return between now and 9 o'clock UK time when we close them out. Each of the ideas are placed live on the video. They've got stops and targets, and they've got risk reward ratios in excess of 2 to 1. They all get published to our TradingView profile as well. So if anybody wants to check them out, it's pretty simple to do so. You go to signal_center and you'll see our trades here from days gone by. So on Friday, I was looking for a double top to play out on Sterling Oz. This was on the 4-hour chart. Looks really nice, I thought. Look for it to continue selling off as it did, but come 9 o'clock, it was only 0.71R on side. Looking for just a shade over 3R on that one on Friday. It's actually interestingly rallied back to retest that level, so it could be an opportunity there again with that one this morning. Steve was looking to trade a range on Bitcoin, given that we saw a bit of appetite for risk on Friday. We saw Bitcoin come alive, and as a result, it moved to the upside, and Steve was stopped out, but interestingly back now to the same level that he shorted it on Friday. So all in all, we lost a small bit on Friday, 0.29R, which certainly we can deal with. We've had a pretty good run lately on some of the other trade ideas. So let's go again today, Steve. Anything you particularly fancy? I've got one ready if you want me to go.
I don't mind. Dollar CAD I was going to go for.
Okay, go on then.
Ah, right. I thought I was looking at your face to see whether you were going to say, I told you about this about 5 minutes ago.
I'll
But
just
yeah,
claim it if it wins. That's fine.
yeah, exactly. Yeah, but the head and shoulders formation I really like. The fact we've broken the neckline is really good. And then sort of like looking more on a short-term basis, if we sort of like drill down to the hourly chart, the last hour bearish engulfing almost well, I suppose it is a bearish outside candle. It's completely engulfed the whole body of the previous candle. And for me, this looks like a bit of a bearish flag. So we can draw the. Actually, I'll do a little channel to make it a little bit clearer. Let's not extend it right. Bit of a bearish flag forming. So I'm going to get short of this at these levels. The stop can be above the high. Let's say. Well, I can't. I've got to do it somewhere around about there. So let's call it 135.47. Has to be bigger than that. Has to give it a bit more of a stop. And you know I like to do even numbers. Getting short here. Stop is at 135.67, and the target's 133.67. That's a 3-to-1 risk reward.
Looking good. Good luck with that. Okay, I'm going to take a look at sterling dollar. Always interesting on Monday mornings when you get these gaps on the chart, and they often present, I think, reasonable opportunities to have a look at getting a quick trade on. So this, if we look, just zoom in just so people can see it. So overnight, or on the Sunday night open, this is actually gapped to the downside. So this was the final candle on Friday, and this was the opening candle on this morning or overnight, Sunday night at 10 o'clock. So now we've rallied to fill that gap. It's actually shot just through it, which gives me a better entry, although it makes the trade look a little scarier. It's currently trading at 113.78, so I'm going to use that as my entry. When you get these gaps filled, they often then move in the direction of the gap. It's obviously not an exact rule, but it is one that I quite like, and one that's standing out for me today. So I'm going to sell that now. Stop loss at 114.25, so it's only a 46 pip stop. And I'm going to target a move back down to these lows that we posted on Thursday, down at 111.51. So looking for a risk reward ratio on that of 4.94. Looking a bit scary at the minute because it has rallied through that that gap. Let's see if it's got the appetite to hold on to it. Let's see if the buyers are going to keep pushing that higher. But that's going to get published right now before it gets any worse. And hopefully we will be looking at a winner come 9 o'clock tonight.
Nice one.
Okay, data today. We have the Eurozone Centix Index, which is due out in just under an hour. And then for the rest of the week, it is pretty quiet, actually. Only the US consumer prices, so the latest CPI reading, standing out on the calendar for high impact events for the week ahead. Obviously, that'll be very important because inflation is front and center of everything really at the moment, and being used to measure what the Fed does with regards to interest rates. So that will be well watched on the 10th. Anything else, Steve?
No, all good. Have a good day out there.
Yes.
Mind your risk reward.
Mind the gaps and the risk
the
reward.
gaps.
Cool. Right. Have a great day, everybody. Catch you tomorrow.
Cheers.
Bye.